They don't ring the opening bell. They don't give motivational speeches. You won't see them trending on social media, behind glass towers with no logos, behind silent offices where phones barely ring. There exists a different class of billionaire. Men who don't sell dreams, they build systems. While the world watches famous investors debate on TV, these figures move quietly, reshaping markets with math, data, and patience. Their names rarely make headlines, yet their decisions ripple through global finance. This is the hidden economy of power, and these are 5 shadow investors. Billionaires you've probably never heard of. Number 1, Jim Simons, the man who beat the market with math. Jim Simons didn't believe in gut feelings. He didn't trust CNBC predictions. And he definitely didn't care about Wall Street legends. Before he ever touched finance, Simons was a mathematician, a code breaker during the Cold War, a professor who solved problems most people couldn't even understand. Then he asked a dangerous question. What if markets aren't chaos, but patterns waiting to be decoded? In the late 1980s, Simons founded Renaissance Technologies, not with traders, but with scientists, physicists, statisticians, cryptographers. No instincts, no emotions, only algorithms. Their crown jewel was the Medallion Fund, a fund so secretive its employees aren't even allowed to talk about it. No interviews, no leaks, no marketing. And yet Medallion achieved something no human investor ever has. For decades, it delivered average annual returns so high they sounded fictional, outperforming Warren Buffett, George Soros, and every major hedge fund in history, not by predicting the future, but by letting machines exploit tiny inefficiencies, millions of times a day. Simons proved a brutal truth. The market doesn't reward intelligence, it rewards systems. By the time Simons retired, he had quietly built a fortune exceeding $25 billion. Without fame, without hype, and without ever explaining how it really worked. And that's exactly how he wanted it. Because in the shadow economy of wealth, secrecy is the advantage. And Jim Simons was just the beginning.
So what happened? So how did you stay ahead of the pack?
By finding other approaches. The real thing was to gather a tremendous amount of data.
Number 2, Ken Griffin, the architect of speed. While most investors tried to outthink the market, Ken Griffin decided to outrun it. At just 19 years old, Griffin was trading from his Harvard dorm room, satellite dishes mounted on the roof so he could get data faster than everyone else. Even then, he understood something critical. In modern markets, information delayed is opportunity lost. That obsession became Citadel, not a hedge fund in the traditional sense, but a data-driven war machine. Citadel built one of the most advanced financial infrastructures on Earth. Thousands of engineers, proprietary algorithms, private fiber optic networks stretching beneath oceans. Milliseconds became money. Microseconds became power. Citadel didn't just trade stocks, it became the market. As one of the world's largest market makers, Citadel touches a massive percentage of all U.S. equity trades, quietly standing between buyers and sellers, earning fractions of pennies, billions of times. Equities, bonds, derivatives, crypto. Everywhere there was liquidity, Citadel was already there. When markets panic, Citadel thrives. When volatility spikes, their systems adapt. No speeches, no predictions, just relentless execution. Today, Citadel manages over $50 billion in assets, while its market-making arm generates profits so consistent they resemble a utility company, except one that prints money from chaos. Ken Griffin rarely explains his strategy, because the strategy is the system, and systems don't need applause. Number 3, David Tepper. Buying fear when the world is burning. In 2008, the global financial system was collapsing. Banks were failing. Markets were free-falling. Fear ruled everything. Most investors ran. David Tepper went shopping. Tepper built Appaloosa Management by embracing one principle. The biggest money is made when emotions break the system. As Lehman collapsed and governments hesitated, Tepper did the unthinkable. He poured billions into distressed bank debt and beaten down equities. Not because he was reckless, but because he understood incentives. He believed governments would not let the system fail completely, and if they intervened, the upside would be historic. He was right. When the Federal Reserve stepped in, Tepper's positions exploded in value. In a single year, Appaloosa made over $7 billion, one of the greatest hedge fund wins in history. But Tepper wasn't a one-hit wonder. Again and again, he placed bold macro bets on housing recoveries, on tech rebounds, on policy shifts, always where fear was highest and clarity was lowest. His edge wasn't prediction, it was psychology. Knowing when panic had peaked, knowing when risk was mispriced, knowing when courage looked insane, but wasn't. At his peak, Tepper became one of the highest-paid hedge fund managers of all time, quietly amassing a fortune north of $20 billion. No cult following, no flashy persona, just one man, waiting patiently. For the moment, everyone else lost their nerve, and still, we're only halfway through the shadows.
In the past, you wouldn't go more than 10 or 12%, or the most recent things that we've seen are that you have about 12%.
We don't have coordinated tightening around the whole world and everybody tightening at the same time too often.
Stage 3, number 4, Stanley Druckenmiller, and number 5, Tom Steyer, or number 4, Stanley Druckenmiller. The macro mind behind global shifts. Stanley Druckenmiller never wanted fame. He wanted precision. Long before retail traders talked about macro cycles, Druckenmiller was already betting on them. Currencies, interest rates, commodities, entire economies. He believed markets were not isolated. They were connected systems. Early in his career, Druckenmiller caught the attention of George Soros. Together, they formed one of the most lethal partnerships in financial history. In 1992, Druckenmiller helped execute the trade that broke the Bank of England, a massive bet against the British pound that earned over $1 billion in a single day. But that moment wasn't luck. It was discipline. Druckenmiller followed strict rules.
Intelligently, I went to get a PhD in economics, and I went there and I said, these people are crazy. They're trying to shove the economy into a math formula.
Be honest with ourselves that a lot of math has crept in for purposes of intimidation, to make cryptic, which is otherwise simple.
Never invest when you don't see asymmetric upside. Never average down blindly. Never let ego override risk management. He ran the Duquesne Capital Fund for over 30 years. And here's the part most people don't believe. He never had a single losing year. Not during crashes, not during bubbles, not during wars. He didn't chase trends. He anticipated regime changes. When technology was undervalued, he went all in. When bubbles formed, he stepped away. When central banks shifted policy, he moved before headlines caught up.
My first boss taught me technical analysis, so I used fundamental analysis and technical analysis.
Eventually, Druckenmiller shut down his fund, not because he failed, but because he didn't want outside capital influencing his decisions. Today, he trades his own money quietly, with a fortune estimated above $10 billion. No podcasts, no courses, no noise. Just a man who understood that in markets. Survival is the real victory. Number 5, Tom Steyer, the long game investor. Tom Steyer didn't build his fortune on speed, or fear, or volatility. He built it on patience. After working at Goldman Sachs, Steyer founded Farallon Capital, a firm that specialized in complex long-term investments most people didn't have the attention span to understand. Distressed debt, private equity, venture capital, emerging markets. Farallon didn't chase headlines. It studied balance sheets, legal structures, regulatory shifts. Steyer understood that real wealth compounds quietly, in places where nobody is looking. While tech billionaires grabbed attention, Steyer's firm accumulated ownership stakes across industries and continents, holding assets for years, sometimes decades. Farallon eventually managed over $20 billion at its peak, and Steyer walked away with a personal fortune in the same range. Unlike the others, Steyer didn't stay completely hidden forever. He shifted toward philanthropy, climate investments, political advocacy, but the machine that made him rich, it never relied on attention. It relied on time. Time to let assets mature, Time to let leverage unwind. Time to let inefficiencies correct themselves. Steyer proved something most investors forget. You don't need to be loud to be powerful. You need to be early and patient. 5 men, 5 different paths: math, speed, fear, cycles, time. And yet, they all followed the same unwritten rules of shadow wealth, which brings us to the final truth. Stage 4, lessons from the shadow investors. The world adores billionaires who are loud. Elon Musk tweets. Buffett gives interviews. Soros makes public speeches. But real wealth, the kind that bends markets and reshapes industries, doesn't need applause. Look closer and a pattern emerges among these shadow investors. Jim Simons, Ken Griffin, David Tepper, Stanley Druckenmiller, Tom Steyer. They all understand a principle most people never grasp. Wealth is built silently, over time, on systems, not spectacle. Systems over emotions. Simons let machines do the thinking. Griffin let speed and algorithms dictate execution. Tepper let market panic define opportunity. Druckenmiller let macro rules guide risk. Steyer let time compound advantage. None of them relied on gut feelings. None of them chased fame. None of them reacted impulsively to headlines. Instead, they created structures, mathematical, technological, psychological, or temporal, that made human error nearly irrelevant. They treat risk not as a thrill, but as a science. Every position, every trade, every investment is analyzed, measured, and stress-tested. They don't gamble, they calculate. And when fear or chaos arises, they don't panic, they exploit it. Patience is power. The shadow investors think in decades, not quarters. While the average person obsesses over daily market movements, these men operate on a grander timeline, 10, 20, 30 years into the future. Simon's algorithms didn't just work last year. They evolved over decades. Griffin's market-making networks didn't materialize overnight. They were built millisecond by millisecond, continuously optimized. Steyer's private equity stakes weren't about quick flips. They matured quietly, gaining power and scale in the background. Time is their invisible ally. While the public panics, they are calm. While headlines scream, they calculate. While others sleep, their wealth compounds. Secrecy is leverage. Unlike household name billionaires, these men rarely speak in public. No flashy books, no viral interviews, no social media accounts. They understand that exposure invites risk. The more you are known, the more predictable you become. The more predictable you are, the more others can exploit you. So they hide in plain sight. Offices with no logos, funds with encrypted data, algorithms no one can reverse engineer, positions that quietly move billions without ever attracting attention. Power in the shadows is invisible, but unstoppable. Discipline is everything. Perhaps the most striking trait of these investors is discipline. Not discipline in the sense of rigid work hours, but discipline of thought, emotion, and execution. Tepper doesn't panic when the world does. Druckenmiller doesn't chase trends. Simons doesn't let human error taint a formula. Griffin doesn't bend rules for headlines. Steyer doesn't let impatience dictate investment. Every action is deliberate. Every decision is calculated. Every move has purpose. The final lesson: in a world obsessed with celebrity and hype, the true titans operate quietly.
Competitive people you will ever find.
Are some of the most powerful people on the planet. Willing to put everything out there. They're willing to lose everything.
These people have so much money.
They build invisible machines of wealth. They harness mathematics, technology, psychology, and patience. They think decades ahead while the rest of the world chases the news cycle. And their empires? They shape markets, influence industries, and quietly hold power most of us can only imagine. These are the shadow investors, billionaires you've never heard of, yet whose influence touches your life every day. If you want to understand wealth beyond headlines, beyond hype, and beyond ego, study them. Study their systems. Learn to see the world the way they do, in patterns and probabilities in decades, not days. Because while most people chase fame, the shadows are where real power grows. And the question isn't whether you've heard of them, it's whether you can recognize their influence in the world around you. Subscribe if you want more stories from the hidden corridors of power. The world is full of billionaires who are seen, but the real movers of money are the ones you've never heard of.